Hi, this is Matthew from Successful Iraqis in America. Today I'm going to talk about different kinds of trading using the two most popular platforms for beginners, which are Robinhood and Webull. And before we get started, please don't forget to hit the subscribe, share, like, hit push button, and let's start. So as we know, there are different kinds of orders, whether it's buying or selling. So the first most common one is market. Market is very easy. I think most of us know what market is, which means either buying at the market price this moment or selling with the market price this moment. So let's say, for instance, S&P 500 SPY is 325. If I make an order of sell, it will send the order to the trading platform and it will take a few seconds. So you'll see the price will be close to the current price, which is 325.12. How to do that? We first go to the bottom left side where it says trade, and we're going to choose whether it's buy or sell, either one. So both of them are going to go by market. So let's go, for instance, sell. I'm going to click on sell, and then by default, as you can see here, is going to go to do a market sell. So we can choose later different kinds of sell or buy, and I'll explain that to you later. But for now, by default, it's going to go to market. And then you're going to say, hey, how many? The only thing you have to fill, because the market price now, as you can see, is 325.12. The only thing you have to decide is how many shares you want to sell. So let's say I have 37 shares. If I want to sell them all, I'm going to go 37. It's going to say, as you can see here, 37 shares. The current price is 325.12, and the total will be $12,029.44. If we click review, it will give you the final trade. And then if we swap up to trade, so just swap the screen up and it will apply the order. Okay, the second kind of trading. The first one we said market. The second one is limit. Limit is not that much different. The only thing here is that you buy or sell with the price you decide. So it's not the market price. So let's say the SPY price now is 325. Let's say I want to sell it when it hits 330 instead of the market price now. Or let's say I want to sell it when it hits 350 or 400. So you decide the price. Whenever the stock hits that price, it will sell the stock. And the same thing for buying. So let's say it's 325.12 now. I want to buy the stock when it goes down, drops to 320 or 315 or 310 or 300 or 290, whatever price it is. So limit is buying or selling with the price you define. So how to do that? Again, we're going to go to the bottom left right side where it says trade. And whether it's buy or sell, whatever, doesn't matter. Let's go for buy this time. And as we said, by default, it goes to market. But this time we don't want to go buy using the market order. We want to create a limit order. So we're going to go to the top right side where it says shares and click on it. It's going to give you the other options of buying or selling stock. And as you can see, the first two are different kinds of market orders. And then here, it will say, the second one here, it will say limit order. So if you click on the limit, it will explain the limit to you. For example, if you want to buy, it's only going to buy after it hits the price you enter. So we're going to click continue. And then it's going to say, the price now is 325.12. What is the maximum price you want it to spend to buy the S&P 500? So it's going to buy at that price or better. So if it hits, let's say I wanted to buy that stock if it drops down to 300. So whenever that stock price hits 300, if it does, or less than 300, which is better for me, it will do the order, apply the order. So we're going to, as you can see, I enter the limit price I want, and then we're going to click on continue, and it's going to tell you if you want it to perform that order during the extended hours or only market hours. I mean, I don't mind extended hours. And then you want it to only for 1 day, or you want it to expire after 1 day, or it will continue for 90 days. Well, I don't mind if I buy that stock today or next week or next month. While it hits 300, I'm good. So I'm going to choose 90 days here. And then it's going to say how many stocks you want to buy. So let's say I want to buy 2 or 3 or 5 or any number of stocks. So you're going to say, let's say 5, right? Or 3. And then review, and it's going to give you the final form of the trade. And then if you swap the screen up, it will. Now, the third kind of trading is after we said market limit. Now we're going to talk about stop loss. Stop loss, I'm going to talk about it. There are 2 different kinds of stop, whether you're buying or selling, but the most common one is the one we use when we do daily trading. And for that one, let's say you want to enter a limit price. If suddenly for no reason the stock start crashing, your stock will get sold at the price you define. Or in other words, let's say, for instance, the stock now, as you can see, the SPY is 325.12. You'll say if the stock drops down, let's say $5, so it drops to 315 or 320 or 310 or any price you decide. You just have to tell it, hey, if the stock start crashing and it hits that price, sell all my stocks, or sell I don't know how many stocks. So you just define where you want it to perform the order. So how to do that? Again, we're going to go to trade, and then we're going to say sell. And then after that, we're going to go to, because by default it's going to go to market, but instead we want to go to shares. And from there, we're going to choose, instead of limit, we're going to do stop order. This one here, that's stop loss. If we click on it, it's going to explain to you what stop order is, which is stop loss. I'm going to click continue. And then we're going to choose what is the price you want to sell that stock if it hits that price. So let's say, hey, now it's 325. Let's say if it hits 320, please sell all my SPY stocks. So we enter the price, and then we're going to click continue. It's going to say you want to for 1 day, or you want to continue for 90 days. Well, I want to continue forever. If the stock ever hits 320, please sell all my stocks. I'm going to choose the other one at the bottom. And then number of shares, how many shares you want to sell. If it hits that price, I'm going to say all of them. 37. If you want to make it less, you're going to say 2 shares, or you want to say 5 shares, or you want to say 4 shares, or whatever. But I'm going to say 37. So review, and then it's going to show you the final trade, and then swap the up to apply the order. And now we explained the third kind of trading, which is a stop loss. Now the fourth type of trading is called stop limit. Okay, hold on. That's, too many trading. Stop loss, stop limit, trading stop. People are getting confused now, I know. So, okay, let's make it easy. What's the difference between stop loss and stop limit? Stop loss will sell the stock with the market price now. So if you say, as we said, if it hit the stock hits 320, please sell all my stocks with the market price at this moment. But if you say stop limit, it will be a little bit different, because in this case, you'll define the stop point where you want to trigger the order, and then you're gonna also define the price of how much you want that stock to get sold. So here, the only difference is you're going to define the price of how much you want it to get sold, and not just when to trigger or perform the order. So how to do that? Again, we're going to go to trade, and then we're going to use, for instance, sell, and then choose from here. See, stop limit. Instead of stop order, here we have stop limit. So we're going to go stop limit order, and then is going to explain stop limit. So as you can see here, if it hits the stop price, it will apply the order, but I will not sell it until it hits the price you enter. So I'm going to click continue. Now I was going to say what's stop price. So the price now of the S&P 500 is 325. I'll say if the stock hits 320, please trigger the order. But I want it, and now it's going to tell you what is the price you want to sell that stock. So I hope if the stock drops from 325 to 320, I wish it will go up to 326. I hope. So I'll say, hey, if it hits 320, please sell. Okay, so let's say if the stock now is 325, and I will say if it hits 320, please trigger the order. But I don't want it to get sold the market price. I want it to get sold the price I decide, which in this case I'll say, hey, if it hits 320, if it goes up back to 321, please sell all the stocks for 321. Now I'm going to say 321 or any other price you decide. So now it's, for example, I'm saying 321. So if it hits 320, please trigger the stop order and then sell it if those stocks hit 321. So if they don't hit 321, it will not get sold. If the stock doesn't go back to 321 after hit 320, that means it's not going to apply the order, but I hope it will hit 321 again. So you're going to go continue, and then you're going to say 1 day, or you want it to continue for, 90 days. We'll choose the 90 days. And then how many shares? Again, I'm going to sell all my shares. 37. Review. Blah, 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 all the details, and then swap out to trades. Done. All right. Now, I think that's clear. Now, the last kind of trading, which is, I like this kind very much, and it's called trading stop. This one's called trailing stop. This is a kind of amazing, interesting kind of trading. So the difference here, this kind of trading is really interesting. What about this one is, for instance, this one will follow the price. So let's say if we want to sell a stock, what this trailing will do is follow the price, the stock, if it goes up. Let's say, for example, let's say I bought the S&P 500 now for 325, and I'll say, please sell the stock if it goes $1 below the maximum price it hit. So now the maximum price is 325. That's the highest it ever did starting from this moment. But if we say later the stock went up to 326, guess what? The stop loss will also go up from 324 to 325. Let's say later the stock price went to 327, and we said, hey, the trailing stop price, we want it to be $1 lower than the maximum. So $1 less than 327 is going to be 326. So see, the stop order is going to follow the stop price. It's going to follow the maximum price it reaches. So as you can see, let's say the stock continued going up until it hit 400. Guess what? The trailing stop price will also go up to $1 less than the maximum, which is how much less than $1 less than 400 is going to be $3.99. So $1 is an example. You can change that to say, hey, if it ever drops, let's say 1% or 5% less than the maximum price. Or you can say $1, $2, $3, 10, 7, doesn't matter, any price. So how to do that? We're going to, again, click on trade and then choose, let's say, buy or sell. Let's go sell. And number of shares. That's if it's a market, but we don't want to choose market. So we're going to go shares here, and we're going to choose the last one at the bottom here. It's called trading stop order. We're going to choose that one. And now this will explain the trailing stop order. So for instance, let's say the first pattern here on the top is a stock price. So let's say it's 325, right? And as you can see, it went up and down and then up more. And the trailing stop is below that. And the percentage are $1 value that you decide. So let's say the stock is 325. Let's say the trailing stop is, for instance, $20 less than the maximum. So the stock price is 325. The trailing stop is going to be at this moment 305. So 305, right? So if the stock goes up, up, up and hits, let's say instead of 325, if it goes up to 345, well, that means the stock went up $20 more. Even the trailing stop is still going to go $20 more. It was 305, now it's 325. See, it's going up. But when the stock drops again, the trailing stop will stay where it is. It's not going to go up because it's going to be, as you said, $10 or $20 less than the maximum price. And here the maximum price was $345. So it's going to be the same trailing stop price. But see, it didn't hit 325 here. And then when the stock keeps going up more until it hits, let's say, $370 or $380, see, the trailing stop will also go up with it. It's going to go from 315, 325 to 335. And let's say if the maximum was 375, $20 less than 375 is going to be 355. See, the stop price went up following the highest price the stock ever hit. But if the stock starts crashing, the trailing stop price will continue the same. It will continue 355 here. And then if the stock crashes and hits 345, all the stock will get sold. I hope that's clear. So we're going to click continue. And then you're going to say, hey, do you want to make it trailing percentage or the trail amount in dollars? So you want to say, hey, if it drops 5% or 2% or 6% or 10%, or you're going to say, hey, if it drops $1, $2, 50 cents, $10, whatever. So let's say if I say in dollars, how much in dollars you want to drop? If it drops, I want you to sell all the stocks. So let's say if it drops $10 less than the maximum price, please sell all my stocks. So now the maximum starting from this moment is the stock price now, which is 325.12. So the trailing stop at this moment is going to be 315. Later, if the stock goes up from 325 to 335, the trailing stop is going to change from 315 to 325. The stock price goes up to 400, the trailing stop is going to go from 315 to 390, which is $10 less than the maximum. So it's going to follow it. I'm going to hit continue. Do you want to continue for a day or for 90 days? We'll keep it 90 days. Now, number of shares, 37. All the shares. Review. So it's going to explain to you all the details, and if you follow up, it will perform the order. Done. So those are all the different kinds of trading on our famous platform, which is Robinhood. Now, if you talk about the same thing, on Webull, let's say we're going to go also to the stock SPY, and let's say we want to buy or sell. Either one doesn't matter. So let's say sell. If you can see here, we're going to see most orders are the same. So we already talked about the limits. So limit, which is defining which price you want to sell or buy it. Now we're talking about sell. If you want to change it to buy, it's here. So it's easy. See, buy or sell, doesn't matter. And all the same different kinds of stock trading. Limit, that means if I want to sell, I will say what price I want to sell it. So I want to sell it for 341.96. Now I'll sell it for $2.99. So if it, again, we said limit. If it ever hits the price you chose or better, it will perform the order, apply the order. So that's limit. We already talked about limit. We don't need to explain it again. It's the same. And the other one is market. We all know market. It's going to sell it or buy it. See here with a market price. We already know that. Stop. We already explained the stop. So you're going to say, hey, if the stock hits this price, please apply the order. So all of them are the same. The only difference, the only kind of trading which is available in Webull, but not on Robinhood, which is called OTO. As you can see in the top right side here, This one is OTO, which means order, trigger, order. All right, what is order, trigger, order? That means if you're going to make more than one order, let's say an order triggers the other order. So I'll say if, let's say I want to sell the S&P 500. So let's say, for instance, the stock price of S&P 500 now is 325.12. I will say if the S&P 500 hits 350, please sell. So that's the first order. That will trigger another order or more than one order. So now I'll say, hey, please sell the S&P 500 if it hits $350. 350 point whatever, 349.83, right? And how many stocks? We'll say all of them. And then I'm going to say sell, right? So I have one order. This is the primary order. See, it'll say sell 36 S&P 500 stocks if it ever hits 349.83. But that order will also trigger another order. I'll say, hey, if the first order gets applied, I wanted you to do something else. I want you to, for instance, after you sell it for that price, if it drops to, let's say, buy if it hits 325 again, and I want you to buy, let's say, I don't know how many stocks, let's say 10 of them, or 20, or 20, right? So I'll say if the first order will trigger this order, and I'll say buy, and now as you can see here, it'll say so we can, because it's late now, but as you can see, the first order here, the primary order, will trigger the other order. So if the S&P 500 gets sold for 349.83, then it will enter another order, limit order will say, hey, if it drops down to 325 again, please buy 20 stocks. So you can see order, trigger, order. You can add more. See, you can add another order. So this primary order will trigger 1 or 2 or 10 orders. You'll just enter as many orders as you want. So is that clear? Okay. Again, I hope that's clear. And if you have any questions, please write your comments down below. Don't forget to hit the subscribe, like, share. And if you have any questions, let me know. Thank you.